Hello everyone. Our topic today, which is session number 99, is loan against mutual funds and stocks, which is basically loan against security. In my earlier session number 67, I had mentioned in detail about taking loans to buy stocks. So that's like a unconventional way you can say that all big investors or veterans say that you should never take a loan to invest in risky assets like stocks. But I have done my own analysis, case studies, realistic returns, and my own experience, and have compiled that video number 67. If you have not seen that, I kindly request you to go and see that. And today we will be concentrating more on how to avail loan against these securities, mainly mutual funds and stocks. You can get overdraft against other fixed deposits and stuff like that, but we will be concentrating mainly on the mutual funds and stocks. So before starting the session, you would be wondering that again, why loan? Because obviously we are small investors, we are not HNIs. So if you really want to grow large, you should require liquidity, enough liquidity to invest in the security or the stock, the mutual fund which you want to invest. If you find it undervalued or beaten down, and you find potential uptrend going forward in the long run, obviously, because we are all investors, not traders. So how to get that amount to invest? If you don't have liquidity, then if you just invest 5,000, 10,000 rupees, it will not fetch you enormous returns. Like I always say, if you find a potentially good stock which is having a much higher earnings potential, and going forward it can generate good cash flows, and hence the stock can go up incredibly, you should put in almost, I would say, whatever you have with you into that. Yes, you should keep your diversified portfolio, but still it should not be like you just invest a small amount in that. You should invest a large sum in that, so that you are very thorough on the stock analysis, and going forward what will happen to that stock is quite predictable as per our study. So if that is there, then there is no risk assets, because you know in and out, you have done the risk analysis, you have done the fundamental analysis, you have done the chart analysis, everything, and you know the potential of how the stock will perform going forward. So in that case, it is highly sensible to put in good amount of money, provided that stock is available currently at an undervalued area or probably a value pick. So in that case, majority I have seen, the subscribers in the group or even the young investors, they don't have enough liquidity or enough cash to invest in it. So in this session number 99, I will be introducing to you a concept of loan against mutual funds and stocks. So wherein what you will be doing, this is a completely digital platform wherein you will be pledging, or you will be using this mutual funds and stocks which you are already having in your portfolio, probably which is a long term portfolio, wherein you are not going to sell that in a day or two or in a year or two. So in such a case, you can pledge those stocks or mutual funds, and then you can avail loan against that. And this is actually a secured loan, because uh, unlike an unsecured loan like personal loan wherein the interest rates are high, because the lender knows that there is no as such a collateral available for that loan amount given, and if the borrower defaults, then there is nothing to be recovered. So to cover that risk, the lender charges you a higher interest rate, unlike in case of this wherein mutual funds you have, it can be liquidated immediately in a 1 to 2 day, and so is the stock which is having a immediate liquidation power. So in such a case, the lender will use that as a lien. So lien is like, it's a legal right or claim against property or asset used as a collateral to secure payment for a debt or an obligation. So they will use that as a collateral, and then against that collateral they will give out the loan, and the loan interest amount is very attractive, because it's a secured loan, as I told. So it can be as low as 9%. So 9% is somewhat much closer to a home loan. Such an interest rate is highly justifiable as far as stock investing is concerned, or again reinvesting in mutual fund is concerned. I would suggest to pledge the mutual fund portfolio, because it's kind of long term, wherein stocks you can have churns in short term as well, based on the fund, based on the stock performance. So better to pledge the mutual funds and buy stocks which is undervalued. So as I told, it's kind of digital loan against security, completely digital, and it is completely paperless, and the overdraft facility will be immediately approved and sanctioned by the particular AMC, whether it is NBFC or bank. So that firm immediately approves that, and this application can be done 24/7, and the overdraft or the amount will be credited into your bank account within 4 hours if it is before 5 p.m., and if it is after 5 p.m., then next day it will be credited to your bank account where it is registered. So already we mentioned that the interest rate is much lower compared to a personal loan because this being a secured loan. We spoke about line, so it's like a collateral against which the obligation or payment is done. So overdraft, we already discussed. Overdraft is like you only have to pay the interest over the principal every month, wherein an EMI is like an interest plus principal. So the principal here, you need not pay it monthly. So you only pay the interest. So like if you have taken a loan for 5 lakhs, you just have to pay the interest, say at 9%, say around 4,000 rupees or something. So only that 3,800 or 4,000 rupees is what you have to pay as an overdraft, which is the interest rate on the principal, and the principal can be paid at the end of 1 year. So basically, these facilities, the loan against mutual funds, is only done for a year. So once the year ends, you can either pay out the principal, or else you can extend the deal to the second year as well by again reprocessing the loan requirement. So that's like you have to pay a processing fee and some stamp duty is there which is to be paid along with GST. So this transaction will again be done for second year as well, and rest all deal remains the same, whether it is interest rate or things like that will remain the same. Only thing is that you have to process it again, so that you need not pay the principal and keep paying the interest rate as an overdraft facility on month basis, so that it is not capital intensive for you. You have got the complete, say 5 lakhs is the loans you have taken, then 5 lakh you have with you and you reinvest that in undervalued stocks. Say for an example, currently as I speak, SDFC is fallen much below. So we have discussed in detail about SDFC Bank in the last session 98, and also in the earlier session to that we have discussed in detail how to analyze banking stock. We have also analyzed banking stocks like South Indian Bank in the last session. So if you have such an undervalued or currently beaten down stock which is having a strong fundamental like SDFC, this is purely a discussion we are doing here. It's not a stock recommendation, as a disclaimer I am telling you. But still, if you have that conviction, if you have done your proper study, then you can take this loan, put that 5 lakhs in a particular stock, and the stock grows exponentially in the in a year. Then either you can sell some other stock which has already reached its potential or the target value, you can say, and you can close that loan of 5 lakhs by booking profits in that particular stock. Say in our case SDFC Bank, so we have invested 5 lakhs into SDFC Bank. So maybe it takes 2-3 years for the full potential to come out. So you may not be able to sell SDFC Bank in a year and close the loan. So that's why I told you that the other stock in your portfolio which has reached its potential, that can be utilized at the end of the year to close the loan. Or probably if you feel that the cost of capital, which is the 9% in case of one of the loan available on mutual funds, then that 9% versus say your stock is growing at even as I conservatively take 12%, 3% is the delta between 9 and 12. So 3% is a free money because it's OPM, other people's money, like Rich Dad Poor Dad, Robert Kiyosaki used to tell. So this loan amount is other people's money. So you are making a 3% delta. And if it goes to 15%, 18%, 20%, 25, 30%, that's your skill. And if that happens, we have seen that in our various stocks which we have analyzed. So if such a thing happens, then it is exponentially profitable for you. And also you have to see the downside risk also. If in case it goes wrong, then you have to firefight it properly as well. Now, as always, this loan against mutual fund can only be availed for investors above age of 18. So no capping on repayment mode. Basically, you can prepay as much as times you want to do in splits and without any charges. Some institutions like SBI, if they are giving you loan against mutual funds, they have some specific demands, like they only accept pledging of SBI AMC mutual funds only, like SBI small cap fund or whatever. So they will take their own pledging of their AMC funds only. Some has got specifics, like they can only take NSDL based stocks only. Some has got CAMS based or Carvi based mutual funds only. So there are some specifics for each institution lending the loan against mutual fund and stocks, so that you have to go into the various sites of, say, various AMCs, and you can easily find out which is very well listed out in their respective websites. Also, if you see, I am taking a loan for 5 lakhs and I am giving the processing fee or everything for that, then after that you are utilizing only 2 lakhs. You are drawing, you can keep that loan ready by only paying the processing fee, and after that whenever you require the fund, then only you can withdraw it. And the moment you withdraw it, say out of 5 lakhs, you only withdrew 2 lakhs. So the interest rate shall only be paid for that 2 lakhs only, not for 5 lakhs. And as you keep withdrawing 3 lakhs, 4 lakhs, and finally 5 lakhs, then only you have to pay the EMI for the total amount. Otherwise, you are having a real flexibility. Like if your targeted stock, say HDFC Bank, is falling only a little, then you are thinking that going forward in 2-3 months or maybe 15-20 days, the stock will fall further. Then, as you have got only a very small time of amount withdrawal from this account, say 4 hours, you can easily withdraw the amount at your wish. So you will withdraw only 1 lakh, then invest in 1 lakh in the particular price. Then going forward, as it falls further, then you can withdraw more amount from this account, from the 5 lakh cushion. So 1 lakh, 2 lakh, 3 lakh, like that. Then you can average out the stock in your portfolio by gradually withdrawing the fund from the overdraft account, and hence your EMI also will be based on the particular amount you are withdrawing and not on the bulk amount of sanctioned amount of 5 lakhs. Also, you should know that the interest payment will be due on first of each month, generally for all the institutions, and will be deducted on the third working day from the bank account via NASH mandate. Also, as I told, you can do unlimited withdrawals, like 25,000 you can withdraw, then 30,000 you can withdraw, 50,000, 1 lakh, like that. In splits you can withdraw. So again, we'll go to the next slide, wherein I have listed the majority of the funding agencies available and what is the kind of minimum amount they will be allowing us to withdraw. So all those things, including the processing fee, the eligibility amount, everything we'll be discussing in the next slide. So as I told, no loan prepayment charges is there, and also no foreclosure charges are there. So at any time you can pay off the principal and then get out of the agreement, and this foreclosure has got no extra charges at all. Another thing you should know is that if you are going with banks, say HDFC Bank or say IDBI Bank, so in that case you need to have an account with the particular bank. So if you don't have an account in that bank, then you have to start an account in that bank. Then again, you will be ending up paying a annual maintenance charge or debit card charge, whatever it is. So this is like extra amount. So this you have to consider along with your interest rate which you are considering. So that is how you should calculate the overall expense. So if it is more than your return, obviously the cost of capital, if it is more than the return on investment, then you should clearly deny that particular deal. So you should look for cheaper interest rates, which we will be discussing in the slide. And I have identified a few firms who are offering the lowest interest rate. Also, it's interesting to note that RBI allows NBFCs to lend 50% of the value of the securities pledge as collateral. So in the sense, if mutual fund is having 10 lakhs, then 50%, which is like 5 lakhs, can be given as loan as per the rule of RBI as far as the stocks are concerned, as this is for the NBFCs. And if you see, that's the discretion of various NBFCs, like they lend 45% of it, 40% of it, 35% of it. That is based on their own analysis, but maximum of 50% can be lent as per the RBI policy. Also, it is interesting to be noted that you are pledging the mutual fund or stocks, and say it is currently at some value, but as the market opens, days goes by, the market can fall also. So if the market falls, the value of your portfolio goes down, and the pledged amount, say it's for 10 lakhs, you have availed a loan of 5 lakhs, which is like 50%. But because the market has gone down, the price or NAVs have gone down, and your portfolio has dipped from 10 lakhs to 8 lakhs, then in that case, your loan eligibility is 50%, which is like 4 lakhs only. So 1 lakh is like a margin call. So this extra margin you have to pay off if you have availed the total 5 lakhs loan. Then the particular firm the lender will give you a grace period, say a week or something like that, based on various conditions and the stock or mutual fund you hold. So based on that, they give some grace period, and within that grace period, you will have to repay that amount, so that your collateral amount is in line with the loan you have or the overdraft facility you have availed. And also vice versa is possible, wherein the stock goes up, the mutual fund portfolio goes up, so 10 lakhs becomes 12 lakhs, then you are eligible for 6 lakhs. So that extra also you can withdraw. So this is another advantage point of it. But also the dip side is to be kept in mind. So that is why I always suggest that if 10 lakhs is what you have and 5 lakhs is your loan eligibility, go for 5 lakhs, but take only say 3 lakhs or 4 lakhs, and rest 1 lakh let it be there, so that if you, even if your portfolio dips, you have enough margin, so that you don't have to repay the principal amount within a short period, but and hence you get a whole 1 year to repay the amount, so that your investments can be in place, and the returns from the investments can be reutilized for repaying the loan. Now on the screen, if you see, I've done a peer comparison, so I'm sure that you will not get this data anywhere. So this is like there is banks and there is NBFCs also. So the difference between banks, NBFCs, or everything we have discussed in detail in our session number 97 and 98. So if you have not seen that, please go see there and have a clarity on that. We will not waste time here in this session. So if you see various companies offering the loan against mutual funds and stocks, or loan against securities, as we call it, is listed here. And the data which is available is put here, and also I thought that unnecessarily data overloading is also not recommended or good. So whatever data, limited data is required, that I have put, and whichever institution which I suggest based on the peer comparison, those data are already mentioned in this sheet. So if you see, the minimum amount of loan can be 25,000, 10,000, 25,000, based on the various institutions. So Mira Asset Financial Services has got a minimum loan amount of 10,000 as well. Now the loan limit, so if it is an equity portfolio, say equity mutual fund or even stocks, then the loan eligibility maximum is up to 20 lakhs. And also if it is a debt portfolio, debt funds like bond funds and etc., bonds or bond funds, in that case you can avail up to 5 crore. Similarly, if it is a debt based mutual fund, again 5 crore here, and equity based mutual fund or securities, then it is 20 lakhs. So you can avail up to 20 lakhs. And if you see in case of Mirae Asset Financial Services, the equity, you can go up to 1 crore, which is the highest in the category, and debt, which is like slightly less, which is 3 crore. Other peers also you can see. Now the loan value, which is like if your equity mutual fund portfolio is like 10 lakhs and you want 5 lakhs mutual fund, so that fits here, because 10 lakhs means 50% of equity mutual portfolio means 50% of 10 lakh is 5 lakhs, so you can easily get 5 lakh loan. But if your mutual fund portfolio is of 8 lakhs, and especially the equity mutual fund portfolio. So if it is 8 lakhs, then 50% of 8 lakhs is 4 lakhs. So 5 lakhs is not possible. But probably you will have hybrid mutual funds or you will have debt mutual funds. So 80% of debt amount is also possible. So you can use a combination of equity mutual fund and a debt based mutual fund, and combined you can get somewhere in between 50 to 70 or average of this. So hope this is clear for you. Similarly for Axis Bank, it's something different. The mix is different. And Mirae Asset, it's like equity mutual fund is 45%, and say 10 lakh means 4.5 lakhs you get as loan, and it is debt portfolio, then 10 lakhs means you will get up to 8 lakhs as loan, because debt mutual funds are more stable, not as volatile as equity mutual funds. Or equity based means it is stock based, so stocks can highly fluctuate compared to a bond fund, wherein bonds are stable, and it is supposed to fluctuate less, so they consider higher percentage of loan over that asset. And also other peers you can see, stamp duty is somewhat similar. Zerodha has got 200, but rest all is having 500 stamp duty. And also the processing fee, you can see it's very high for ICICI Direct. Now SBI, it is like 0.5% of the loan amount, or 1,000 rupees, whichever is maximum. So if you are going for very high amount, then 0.5% also is very costly. Kotak, if you see, it's 2%, which is very high. Now GST is like 18%, so that is to be added or and above this. Now Mirae Asset, I have seen that it's flat. The founder also was talking about this. So he has made it very easy and simpler and less costlier to avail loans from Mirae Asset Financial Services. Again, the Mirae Asset Financial Services scores here by giving a lowest processing fee of 1000 rupees plus GST. Now, in that case, Zerodha is also having the lowest one, I can say, but the issue here is that the interest rate, best interest rate available is 11.5%, wherein in case of Mirae Asset, it is just 9%, which is lowest in the entire category. So 9% is a win-win situation, wherein we'll be ending up paying a lower interest rate with a lower processing fee and also the renewal charges. As I told, every year, if you don't want to repay the principal, say 5 lakhs, so that is our case. So I'm just taking a case of 5 lakhs. It can be 1 crore also based on your capacity. So that 5 lakhs, if you don't have or if you are unable to repay, then you can extend the loan to the next year as well by paying this processing fee or the renewal charges, which is same as that of the processing fee. So yearly it is like a new processing. So the principal need not be paid and you keep paying the interest rate. So 9%, as I told, it is something around 3,800 or 3,900 rupees will be the EMI for 5 lakhs, which you have availed with a 9% interest rate, which is the lowest in the category. So penalty rate is something like ROI is 9% here. So 9% plus the rate of interest, which is ROI, and 9% plus 4%. So 13% is what you will have to pay if you are defaulting one of the payments for the interest rate to be paid monthly. So also we spoke about the minimum withdrawal amount. So as the minimum withdrawal can be as low as 1000 rupees. So you have availed a loan for 5 lakh rupees and you can keep withdrawing as much as you want as far as it reaches the 5 lakhs. So 1000 rupees or 50,000, 20,000, like that you can keep withdrawing using the app. So Mirae Asset has got their own app. So you can simply click a few buttons and you can clearly do the transactions very easily. I have personally availed a loan from this organization, and I'm having a smooth processing of this loan also, and successfully invested in wherever I wanted to invest, and the things are going well there. Now, if you see the categories, it is very clear that Mirae Asset Financial Services is the uh, winner here, clear winner here with the lowest interest rate, with lowest charges, and also you can easily get the loan with a good digital platform app available for them. So you can go search on the web and get the details of this. If you want any help in this regard, I can also help with the links. If you want, please comment in the comment box. So that's all about loan against mutual funds and stocks, which is basically securities. So this is an overdraft facility. More than a year, if you want continuously, you can go with an EMI option also, wherein you will have to pay the principal also, which I think it will be difficult for you to justify for the investments you are doing. So it is better to go with an interest payment only, and principal can be paid at the end of it, which you can utilize this leverage and help invest in quality assets, which generates more cash flow for you. And this investing will actually accelerate by the beauty of compounding. So the stocks keep compounding, just like you are taking out the dividends and reinvesting into the stock. Just like that, if you take loan and reinvest, and you are sure that you will get higher returns from the stocks, then it is a clear winner here by using this leverage tool. Hope this session was useful for you. If you have any doubt or any assistance you need with respect to the topic, you please comment in the comment box. I'm really happy to help you on this. See you in the next video. Till then, happy investing.